Hey folks, Joshua Flournoy here, licensed Iowa realtor and land specialist for United Country Hawkeye Farm Management and Real Estate here in southern Iowa. If you're watching this video, it's most likely because you're dreaming about owning land here in southern Iowa to hunt those big bucks we have here. However, before you can do that, you got to have your name on that land deed. And if you're like most people, you don't have enough coins jingling around in your back pocket to pay cash for your land, so that means you're going to have to finance it in one way or another. Well, if you go into your typical homeowner consumer lending institution you work with where your checking account is and try to get favorable terms to you, the borrower, in a loan to buy land, you're probably going to walk out pretty disappointed. So this video is all about how do you finance the purchase of ag, hunting, or recreational land. And what we're going to explore in this video is information on how to do that through Farm Credit Services of America. I'm getting ready to go and sit down and do an interview with Julie Sandine, Financial Officer at the Oskaloosa, Iowa branch of Farm Credit Services, and ask her just what is the process of financing hunting, ag, or recreational land through Farm Credit. If you're looking to buy land here, you're dreaming about it, but you're not quite sure financially how the process is going to work because you can't pay cash for it, then you need to watch this video from beginning to end. No, I'm sorry, there's no videos or pictures of big bucks in this video, and the only shot of the outdoors is going to be this corn that's standing here behind me. But if you want an honest, frank, and informative discussion about how to turn your landowning dream into a landowning reality, I strongly suggest that you take a little bit and watch this video because it's going to be chock full from beginning to end of very good information about how to do that. So if you want to buy land in southern Iowa, call me at 641-203-9427. If you want to know how to finance that land and turn your dream into a reality, watch this video. We'll see y'all. Hey folks, we are here at Farm Credit Services of America office in Oskaloosa, Iowa. We're meeting with Julie Sandine, who is title of Financial Officer here. She is responsible for the ag loan origination for a good chunk of south central Iowa. And so we won't go through all the counties that she's in, but Farm Credit has multiple locations in southern Iowa and central Iowa. And we'll put up her contact information. And if you would be financing ag land or purchase of recreational or hunting land with ag income on it, there's a good chance that she'll be the one you'd be working with. And if not her, then she or someone in her office can get you in contact with one of their other offices for who you'd be working with in the county you're in. So we're not professional broadcasters here, but we're just going to do our best. This is an informational video. It's not meant for entertainment purposes. So I'm just going to go through a list of questions and let her tell me what she knows. So thanks for being with me, Julie. I appreciate your time.
Yes, thank you.
First question is, how is Farm Credit Services different from the average bank or credit union as regards the ability to finance the purchase of raw, recreational, or hunting land?
Yeah, so Farm Credit Services of America, we're chartered to do business with farmers. So in order to borrow with us, you actually have to be eligible with farm income. So that is one way we differ from a local bank. They typically work with consumers, meaning non-ag related. So because we finance ag and we focus on ag, we understand ag credit and how ag income works. It's not always a steady income. It can differ from year to year and from month to month for that matter.
Now, just to clarify, you don't have to be a farmer to finance the purchase of land through Farm Credit. Your land that you're purchasing just has to have some farm income.
That's correct.
Okay.
Yep.
So just so everybody understands, you don't have to be a farmer to finance through Farm Credit.
That's correct. We finance people that are not farmers every day, all day long. We just have to make sure that the farm ground that you're looking at purchasing has the ability to produce at least $1,000 in farm income a year.
Okay. Second question. Why can Farm Credit Services of America finance the purchase of raw land in many situations where the typical bank finds it more difficult to do so?
Again, that goes to the understanding of how ag income works and the ability to look at the credit with the projected income that's going to be coming off of that property. A lot of consumer lending banks don't look at ag income as a steady enough income, and they don't know how it works. I mean, you hear stories every day of people going in and looking for credit and a farmer having difficulty getting financing for a home loan because they just don't understand that Schedule F or Schedule E.
Well, I'm not a farmer, but having been self-employed almost my entire adult life, I know how the banks are a little more concerned about how you show your income and all that. So
Yes.
It sounds like Farm Credit just has the ability to look at multiple factors, not just your credit score and your current income.
Yeah, that's correct. Yeah, we look at a lot of different facets when we're looking at financials. We look at your credit bureau score. Don't get me wrong, we do have a minimum on that. That's 650. So as long as you, make your payments on time, that's basically what a credit bureau score says, is do you make your payments or do you not make your payments timely? So we look at that. We look at the balance sheet strength. We look at some of the things we look at on that balance sheet is working capital, current ratio. We look at your owner's equity. So how much do you owe in comparison to how much you own? And then the other facet of that is your projected income as well as your cash position. So your tax return says what's your cash position, cash repayment capacity. So we look at all of those things and try to make a story out of it and whether or not that story is positive or negative. And so, we ask for a current balance sheet and 3 years tax returns the majority of the time. If you're talking about wanting a line of credit, then we may ask for more. We may ask for a couple of years of balance sheets and 3 years tax returns.
Okay. Great. So I know this is a question, the next one that could lead to a very long discussion, and in most cases probably would. But can you mentioned that there's a minimum credit score, 650. And to finance as an ag loan, which is what y'all specialize in, it has to have at least $1,000 of farm income.
Yes.
Now, let me just ask a question. I'm assuming that could be in the form of obviously crops or CRP income. What about hay ground?
Yeah.
Okay.
Yep. Anything ag related. So we have guys who have CRP, they cash rent it out. CRP we consider cash rent because the government's paying you cash rent to maintain that property for their purposes. Hay, if you're planning to either rent out the hay ground or bale the hay and sell the hay, that qualifies.
I'm assuming. Could I assume that, say, you were planning to have a small herd of cows, and it was projected to make at least $1,000 a year? That qualifies also.
Yes, that's correct. So I mean, it could be pasture ground, and you're planning to buy 10 head of cattle and run them on there and sell the calves. Yep,
Okay.
Absolutely.
Great.
Anything ag related.
Great. And so I think you already talked about this a little bit, about the flexibility of Farm Credit to take more into consideration to help finance the purchase than just the buyer's credit score and current income. I think you already pretty well, covered that.
Okay.
Tell me about interest rates. How does interest rates compare between Farm Credit and typical consumer lending bank? And also after that, go into a little bit, what does Farm Credit offer as far as like length of loan term, options, and loan structure? Fixed rate versus ARM, that kind of thing.
Yeah. So the first question, how do our interest rates compare to local lenders? So the one thing that Farm Credit does is we fund our loans with long-term bonds. And so that gives us the ability to offer long-term fixed rates where a bank backs their loans with deposits. So those are typically ARM loans, adjustable rate mortgages, meaning you have a short-term fixed rate, and at the end of that term, it's going to reprice with most likely a cap of, 4 to 6%. Just depends on the bank. So Farm Credit offers long-term fixed rates anywhere from 5 years to 30 years for real estate.
Let me just reiterate that. Farm Credit offers long-term fixed rate loans on land. You're not going to go into many consumer local banks and find that to be available. That's one of the things that first attracted me personally when I'm looking for land to working with Farm Credit. I was like, long-term fixed rate?
Yeah.
What's the catch, right?
Yeah.
But really, there is no catch, right?
Right. Yeah. So we offer that anywhere from, again, 5 to 30 years, up to 30 years. Most lenders, you're going to be a max of 10 years. And anything aside from that, they're going to send that loan out to, say, Farmer Mac. Loans, and that comes with a whole nother set of issues, depending on the consumer or the producer and how they whether they like their loan to be sold off or if they want to be held in house.
So I know this is I'm sure this changes over time depending on what the I guess what y'all base your interest rates off of, being long-term treasury bonds. Versus a consumer bank off of deposits. But typically speaking, for a ag land finance, y'all are going to almost always be lower on the interest rate than a consumer lending bank, correct?
Most generally, yes. Most generally, our long-term rate aligns with their ARM that they're offering you.
Okay.
A lot of phone calls I get is, well, that's about the same as my bank. And I said, well, are we comparing apples to apples? Let's make sure we are, because are we talking a 20 or a 30-year fixed rate? Or are we talking my 20 or 30-year fixed rate compared to your 5-year ARM or your 10-year ARM?
And of course, you have no idea by the end, if you're doing one of those ARMs, you have no idea by the end of your loan what rate you're going to be at.
Right. Yeah. So you can lock that long-term fixed rate in. And then, Farm Credit, we are customer owned. And so we're cooperative, and so we also pay back a dividend every year, which in effect lowers your interest rate by that percent that we pay out.
Talk about that a little bit, about the dividend. That was another one of the questions I had, and that was another one of the things that I was very interested personally in working with Farm Credit for, because essentially the dividend lowers the effective interest rate you're paying on the loan, right?
Right. So in effect, your interest rate is lower by that percentage that we pay out in patronage dividend. That percentage that we pay out can differ from year to year. However, our board has come out and said that we will let customers know every year what that third year patronage dividend will be. So a producer will know for 3 years in advance what that patronage dividend is going to pay out.
So you set it for 3 years in advance, basically, and it stays the same for 3 years, and then y'all reevaluate.
They reevaluate it every year and let you know. So you'll always know for a rolling 3 years what that patronage is going to be. That was a percent the last couple years, and they actually ended up paying 1.25% this year.
Wow.
We did a kicker 1/4 basis point payout to our customers this year.
Nobody was upset about that, were they?
No one. Yeah, and they did not know that it was coming. It was a complete surprise.
Wow.
They did not announce it until the checks went out in the mail. So producers were very happy to get an extra bonus off of their interest rate.
And the percent of the percentage of the dividend, when you say 1% or 1.25%, that's based on what the principal left on the loan is, or?
Yeah, so that patronage dividend is paid out based on the average daily principal balance.
Okay.
So most of our real estate loans, not all, but most of our real estate loans have an annual payment. It's a lot easier to figure what your patronage is going to be if you have an annual payment because your principal stays the same all year long.
When you say annual payment, you mean they pay it once a year?
Yes.
Okay.
One time a year payment. That's really easy to figure. It becomes a little bit harder to figure. Not impossible. Obviously, you can do the math. If you have a more frequent payment and reduce that principal more often. But let's just use an annual payment, for example. If you have $100,000 loan and you make that annual payment, and let's just say our patronage is 1%, so you're going to get 1% of 100,000. So you're going to get a check in January or February of the next year for $1,000.
Right. That's pretty easy to understand.
So you're getting $1,000 of the interest that you paid in back to you. So not only do you get that, in effect, lower interest rate, but you're also getting the tax benefit of being able to write off the full amount of interest that you paid in a year in that on that tax return.
And Farm Credit is not a public, it's a customer-owned company, but it's not like a public company traded on the stock market, right?
Correct.
But the dividend is essentially like a dividend-paying company on the stock market.
Yes. So we pay back dividends to our customers. Basically, we're paying you back a percentage of our net profit.
Okay.
Yep.
Good. Okay.
The other question in that was our payment structures.
Yes. Okay. Yes. That's very important because that's very unique also. So please address that.
Yeah. So we can offer monthly, semi-quarterly, quarterly, and annual payments. And so you have 4 different ways that you can make those payments. We can also get creative and say, what we like to do is we like to structure our loans to where we know for a fact you're not going to have an issue paying that. So if you buy a farm and you want to borrow, $500,000, and that farm is only going to say pay X amount of money annually, and that's not enough to make that payment. Let's just say the amount of money that you're getting off of that property isn't enough to make the annual payment. What we're going to say is, we're comfortable doing this loan, but what if we split it up and we did $250,000 on annual and $250,000 on monthly? That way, the annual payment can service this $250,000, not a problem, and then your off-farm income can service monthly the rest of that loan, and then you don't have to worry about keeping that monthly payment back every month in order to subsidize that annual payment.
So if I go into a consumer lending bank, a home bank, and ask if they can do a structure like that, they're going to be like, what?
Yeah, I don't know that for a fact.
Probably.
I don't know that for a fact, but yeah, we can split that loan request in order to make the cash flow that's coming in work for that producer.
Yeah, I mean, as someone who's self-employed again for most of my adult life, I know that people who are in the regular workforce, they are used to a check every 2 weeks, and farmers, they're used to what I was used to, which is sometimes you get a lot and sometimes you don't get much, and you gotta make it work. So I mean, that is a crazy amount of flexibility for a lending institution. So that's great information. Talk about, so what about down payments? Talk about why Farm Credit requires 35% down, and kind of work that back into how that affects the ability of Farm Credit to be more creative in financing and loan structure.
Yeah, so Farm Credit Services of America, we're going to be straight up honest. We are more conservative lender than your local consumer banks. A lot of those banks will, straight up out of the gate tell you we'll do an 80% loan to collateral value, or say a 75% loan to collateral value. We offer that long-term fixed rate. Yet again, that long-term fixed rate. So we are willing to stick our necks out there and say we'll finance you for 30 years on this real estate loan, meaning we have more years of risk out there from the get-go. And so we want to be a little bit more conservative. Again, ag real estate isn't always a straight up guaranteed income. It never is a straight up guaranteed income. You don't know what your income is necessarily going to be from year to year. And so again, there's that higher risk out there. So Farm Credit has taken the stance. Farm Credit Services of America has taken the stance that we will, because we are doing a longer term fixed rate and having that longer term risk out there, we want to be a little bit more conservative on our loan to collateral value. That also gives us the ability to work with the producers, say in 5 to 10 years, if they're struggling a little bit on making that payment. We have a little bit more flexibility to, again, help that producer out in some way, shape, or form, because we didn't go out and max out our loan to collateral value.
You don't have as much on the line from the beginning.
Right.
So 35% down payment, that's the minimum, correct? Or
yeah, so that's, if you're talking a 20 to 30 year loan, we're probably talking somewhere in that 30 to 35% down.
Okay.
As you shorten the term of that loan, so some guys don't want to go 20 to 30 years. Some guys think that they can repay it in 10 to 15 years, and even some people do 5. But as you shorten that loan term, our down payment requirements lessen as well.
Okay.
So we're willing to go that higher loan to collateral value with a shorter term loan.
Okay.
That risk isn't there.
Gotcha.
That long-term risk isn't
Right.
necessarily as high.
And presumably someone could pay more than the minimum if they wanted to.
Absolutely.
Okay.
Yeah, I mean, we have people put 50% down all the time.
Okay.
Just whatever you feel comfortable with. And, that also depends on interest rates. Guys are more willing to borrow more in a time when interest rates are low in comparison to when interest rates are high.
Sure. You already talked about the dividend. And you really talked about the loan repayment structures also. So that knocks out a couple more questions. Okay, this is a big one. What about recreational or hunting land that also has a house on it or does not have ag income on it? Can the house and land be financed as a single mortgage, or how would that work? And you guys have a partnership with I believe it's called Rural First.
Yes.
So kind of talk to me about land with house and land with no ag income on it.
Yeah, when a house becomes involved, you start to get into that consumer lending category. So if there is a house on the property, or if there is very little to no income ag-wise, you start to talk about a consumer purpose recreational loan, and that would have to be handled through our Rural First department. Cheryl Frampton is our local Rural First officer. She handles those regularly. They do have different requirements, different application process. Everything is separate from Farm Credit Services of America. We can gather the financials for them and get those to Cheryl, but their requirements are different from ours. I know on recreational land that has very little income, they can actually do, they could offer you a 80% loan to collateral value on that. Because it's consumer lending, it's not ag lending, because it doesn't have that ag factor in it. The reason why those have to go through consumer is federal requirements. They require disclosures, and those are very, very important and must be done properly, or else there's a big, huge risk to the lending agency if they're not done properly.
So just to clarify, what if it is a piece of income producing land that would definitely meet the minimum requirements to finance through Farm Credit, not through Rural First, but it also has a house on it?
Yeah, so it cannot be, the primary purpose cannot be to buy that house or to be the primary residence. If it is the primary residence and the value of that house is more than 50% of the value of the property, then it has to go consumer.
Okay. So if it was someone, so I live in Iowa, but if it was someone who was wanting to buy land here but had no intention of moving here, but they were either it already had like a little shop house building, or they wanted to build something like that, but it wasn't going to be the primary residence, and it was less than 50% of the value of the loan, it could, and the property satisfied the minimum ag income requirements.
Yeah.
You're saying that could possibly still be financed through farm credit.
As long as the majority of the purpose of that property is ag,
Okay.
then I could look at it.
Okay. All right.
That's correct.
So, okay, great, good information there. Let's see here. Can farm credit work with buyers wanting to do a 1031?
Absolutely. We do it every day, all day long. We actually work with a couple different 1031 property exchange agents.
Qualified intermediary?
Yes, we recommend a couple because that's who we work with regularly, but we'll work with anyone. As long as you know who you want to do your 1031 exchange, we work with them and make sure that we have the appropriate documents in place and meet the qualifying standards of a 1031 exchange.
Okay. And I'm going to throw in one kicker question here that's not on there. It's one I just kind of thought of. Since you guys do have the ability to finance for a very long term, let me just throw out a quick hypothetical and you can just give me a general thought on it. Say the property that someone is buying it definitely meets all the ag income requirements to be financed through farm credit, but say that the majority of the ag income is through a CRP contract rather than crop income. We know that CRP contracts are not forever. So say you do a 30-year loan and you got this 10-year CRP contract, things change. The farm bill changes. The amount of acres that they want in CRP from sign up period to sign up period frequently change. Is that just something that farm credit mitigates their risk on that again because of the high down payment? Or
so we don't really typically worry about that so much.
Okay.
If it's only a 2 or 3 year contract on CRP, we maybe ask the producer, what's your plans after that CRP is expired? Are you going to re-enroll it? Or are you going to cash run it out? Are you going to, what are your plans to do after that CRP expires? If it's a short term by the time they apply. But most of the time, let's just say it's got 10 years left or 8 years left. We know that the producer has the ability to do multiple things with that property. They can, one, re-enroll it at whatever that rate is. They can decide to take it out of the CRP program and till it up and start farming it themselves. They could find another producer who's willing to rent that property, that ground out and farm it themselves. Typically, the ground that you'll find being accepted into CRP, for the most part, if they're larger fields or fields themselves, not buffer strips. Let me clarify that. So as long as they're not buffer strip CRP, those fields have a decent CSR on them, and they can be farmed. And a lot of producers want to farm them.
Have been being farmed prior to being in CRP, most likely, because that's one of the requirements, right?
One of the requirements is they had to have been farmed for
3 out of 5 years.
Yeah. So we know that there's that ag income ability out there on that ground, so we don't really worry too much about it.
So as long as it has options,
yes,
to replace that income or renew that income,
yes,
then that's what y'all want to see.
Yes, and we're not. For the most part, producers have the ability to finance that property, cash flow that property outside of the CRP income if absolutely necessary. Do we stretch our neck out there for some producers that, it's questionable credit? Yeah, absolutely. We do that all the time. We want to give producers the ability to go out and buy farmland. We want more producers out there. However, we also, sometimes make that decision not to finance someone because we don't think it's the right decision for the producer too. I mean, we don't want to be that lender that puts someone in a bad spot that we think that they're not going to be able to cash flow something.
Definitely.
Long term.
That's pretty much the list of my questions. Is there anything you can think of that I that I haven't brought up as far as kind of getting a general idea of how Farm Credit works?
I don't think so.
Okay.
I think we've covered it.
Okay, great. Well, thank you for your time, and I will put Julie's contact information on the video, and I'm sure she'll be happy to talk to you if you're thinking about buying land in southern Iowa and have any questions that we didn't go over here.
Yeah.
So appreciate your time.
Yes, thank you.
This interview was not meant to be an exhaustive treatise on how to finance recreational ag or hunting land in Iowa, but hopefully it is a good beginning for you to give you some things to think about. Because I know when I was looking at buying hunting land, it was a bit of a gap to take me from dreaming about buying hunting land to the idea of, wow, can I actually do this? I can actually do this. And so maybe the information we've gone over in this interview today will help take you, or at least push you in the direction from being a land dreamer to actually being a land buyer in real life. So if you have any questions about buying land or interested in buying land, give me a call. Joshua Flournoy at United Country Hawkeye Farm Management and Real Estate in southern Iowa. And if you have questions about financing the purchase of hunting land, give Julie Sandine a call or someone else at one of the Farm Credit Services of America offices in southern Iowa. Well, I hope this video was informative for you and that you got something out of it, and we'll be trying to bring you other informative videos over time about the land buying and land owning process here in southern Iowa, and we'll be posting those videos on our Iowa Land blog at my website at southerniowaland.com. Well, we'll be seeing you. Have a great weekend.